All right, let's jump right in. The financial markets, they're sending out this massive signal right now, and today we're going to break down exactly what that is. It's something called a risk expansion regime.
So what does happen when all the markets start moving together? It's a great question, right? Because that's pretty much what's going on. You've got stocks, you've got crypto, you've even got things like gold, and they're all moving in sync. They're telling us the same story. The big question is, what is that story?
Well, it comes down to this idea called risk expansion. And really, the easiest way to think about it is it's like a rising tide of money that lifts all the boats at the same time. This is not one of those risk-off moments where everyone's running for the hills. No, it's the total opposite. It's investors confidently embracing risk everywhere, and it's all being fueled by one crucial thing, a flood of liquidity.
Okay, so how do we actually know this is for real? Well, let's go ahead and read the dashboard, because the proof, it's all in the prices.
So, the first big clue, the most obvious one, is what's happening with what we call growth assets. The stuff people buy when they're feeling good about the future. And these things aren't just creeping up, they are breaking out, and with some serious conviction. That tells you confidence is running really high. I mean, just look at the S&P 500. It's absolutely smashed through a major level, and it just keeps on climbing. This isn't some tiny little move, folks. This is a huge signal of widespread strength, of real confidence in the stock market. And it's not just stocks, not by a long shot. Just look at Bitcoin. It's also ripping to new highs. Now, this is so important because it proves the rally isn't just stuck in one little corner of the market. This risk-on feeling is spilling over everywhere into totally different kinds of assets. And that's what confirms we're in a real, broad expansion phase.
Okay, but here's where the story gets really interesting. It's not just about what's going up. At the exact same time these growth assets are soaring, the things that usually signal fear in the economy, they're doing the complete opposite. They're dropping like a rock. Take crude oil, for example. It's fallen sharply. And that, my friends, is a huge deal. Why? Because lower oil prices mean less pressure from inflation, which has been, the big boogeyman hanging over the market for a while now. And then you got the VIX. You've probably heard it called the fear index. Basically, it measures how worried people are about the market crashing. And right now, it's falling. That's a clear signal that investors are feeling pretty calm. They're getting way more comfortable taking on more risk. So when you put all of this together, it leads to a really important conclusion, and this quote just nails it. This is no longer positioning noise. It is broad participation. What that means in plain English is this isn't just a handful of big hedge funds moving money around. Nope, this is everybody getting in on the action. It's a widespread movement, and that tells you the trend is the real deal, and it's got some serious legs.
So what's the engine driving this whole train? Because it's not random, right? There's a clear chain reaction going on here, like a series of dominoes falling one after the other. Let's actually walk through how it all works.
So it all kicks off with that drop in oil prices. Step 1, that cools off inflation fears. Okay, so then step 2, that lets bond yields fall, which basically makes money cheaper and financial conditions easier for everyone. Then step 3, a weaker US dollar starts pumping more and more liquidity into the whole global system. And the final step, step 4, where does all that cash go? It has to go somewhere. It flows into everything, stocks, crypto, you name it. And that's what creates this synchronized rally we're all seeing. It's a textbook chain reaction.
And here's the really crucial takeaway from all that. The market, it's not waiting around for permission anymore. It's not waiting for the next Fed meeting or some economic report. It's now running on its own fuel. This mix of easy money and powerful momentum has created this self-propelling cycle. Okay, so with all that said, the big question is, what's next? Let's break down the 3 most likely scenarios for the next day or two, so you know exactly what to be looking for.
First up, scenario 1, and this is the one that's active right now. The trend just keeps going. Simple as that. As long as we see oil stay below about $85 and yields stay in check, all the ingredients are there for this momentum to just feed on itself, and that could push everything even higher.
All right, scenario 2 is what I'd call the pause. Look, the market has gone up really far, really fast. It would be totally normal, even healthy, for it to just take a little breather here. Hang out around these levels, digest the recent gains, and get ready for the next move. This isn't a crash scenario. It's just a healthy pit stop.
And finally, we have scenario 3, the shock reversal. Now, let me be clear. This is the least likely one. For this to happen, something would have to come out of left field, a major shock to the system that completely shatters this trend. We're talking something like oil prices suddenly shooting back up over $90.
Barring a big shock like that, the path of least resistance really does seem to be higher.
All right, we have covered a ton of ground here. So let's boil it all down to the one single thing you need to remember. If you take away anything from this, let it be this.
Remember this quote. This is broad, liquidity-driven risk expansion. It's not about one single stock. It's not about one sector. It is a system-wide move. The fuel here is liquidity, and it's just lifting everything up with it.
And this leads to the second key phrase to remember. The market is now trending, not testing. That's a huge difference. It's not trying to figure out where to go anymore. It's found its direction, and now it's just moving forward with real conviction. So it really looks like this breakout is feeding itself now. That initial fuel from liquidity has turned into pure momentum. The market's direction feels pretty darn clear, which leaves us with really only one big question left to answer. Just how long can this momentum last?